there. Very good morning to all our viewers who've tuned in live to this broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all those news and cues that you need to be watching out for that could go ahead to impact your trading day. So stay right here. But before we get to all of those stocks and strategies, let me take you through all the top headlines this hour. Well, Wall Street closed mixed, but the futures have risen ahead of the release of the February CPI inflation print. Stocks in the Asia-Pacific region are trading largely higher, with the Japanese Nikkei underperforming this morning, while the GIFT Nifty is suggesting a flat start for the Indian equities. And if you look at the commodity front, Brent crude is trading in a range-bound manner of around $82 per barrel. This ahead of the global crude outlook reports, which are expected from OPEC as well as the International Energy Agency this week. If you look at the cryptocurrency front, that one continues its rally with the Bitcoin hitting a record high of above $72,000. And CPI for the month of February is expected to be unchanged at about 5.1%, but an uptick in food prices may cause retail inflation to remain above the January levels. Meanwhile, factory output for January is seen at a little over 4%. And among stocks in focus today will be Aditya Birla Capital as it announces a merger of its wholly owned subsidiary Aditya Birla Finance with itself. Also ITC after there is talks of a stake sale from its British American tobacco company, as well as pharma and banking names will be in focus. And 4 years after it was passed by Parliament, the Union government has gone ahead and notified the rules for the Citizenship Amendment Act, or CAA as we know it. The law aims to give Indian citizenship to Hindus, Sikhs, Buddhists, Jain, Parsis as well as Christian immigrants from Pakistan, Bangladesh and Afghanistan if they've entered India before December 31st, 2014. The law won't apply to certain areas in the Northeast. Well, quite interesting there to see all of those, developments take place on the political front, and all of that will definitely have some bit of ramifications on the equity markets as well, and that's how we've seen it. But the markets, if I have to look at that, a broader picture, I think we've reached in this consolidation zone, we could say, because we've seen a good uptick and rally in the past few sessions before we saw that bit of change. But let's discuss on what could be those factors that are really going to impact us. But before that, also let me take you through some of those F&O cues. Now, the Nifty PCR, that one managed to fall to about 0.94 versus the 1.27 that it was recorded in the previous session. This, remember, is the put-call ratio in terms of your options data, and this indicates the mood pretty much of your equity markets. Now, that one has dropped to that 0.94 levels, indicating quite a bullish market trend ahead, we could say. As for the stocks that are in the F&O ban, now NSE has gone on to add Aditya Birla Fashion and Retail as well as Hindustan Copper to that F&O ban list for March 12th, whereas continuing in that ban list is Manappuram Finance, Mahanagar Gas, SAIL, Tata Chemicals and Z Enterprise. Now, this, of course, that means you cannot trade in the F&O in these stocks. But let's also get a picture of what the fund flows have been in yesterday's trading session. And the provisional data shows that foreign institutional investors, or FIIs, have gone on to buy shares worth about 4,212 crore rupees, whereas DIIs have also been good net purchasers of about 3,238 crore rupees worth of stocks on March 11. So quite interesting that setup, but we did see that profit booking, and that is likely perhaps to continue. But which would be those sectors that you need to be watching out for? Let's discuss that and more with my guest today. Joining me is Aamar Singh. He's the Vice President at Angelone. Good morning, Aamar, and thanks for speaking with us here at Moneycontrol. Let me first straight up get to what we've seen, and perhaps you can explain it in terms of what the charts are really indicating, because we are seeing some temporary weakness, we could say, but that could just be short term because we've seen quite a good run up so far. So how would you really, what should be the levels one should be tracking, especially in the F&O segment, when you look at how the trade has been so far?
So if I look at the markets, clearly it tells me that overall there is some sort of profit booking happening at the current levels, because Nifty did witness our record highs, and what we are seeing is that currently we are witnessing some sort of profit booking. But overall, the trend still remains positive. On the derivative side, yes, we are seeing some sort of, I would say, a bearish trend, means more of call writing. If we look at the put call ratio for the current this week's series, that's somewhere around 0.7. And if we go back and look at the monthly series as well, so there the put call ratio is different. It's that 1.33. So that tells me that from a short-term perspective, yes, we are witnessing some sort of, I would say, profit booking coming in. But the monthly series tells me that since the TCR is on a higher level, so we've got more of put writing. That is a positive sign. So I would suggest that one needs to be slightly cautious at the current levels, because there would be some triggers which the markets would be waiting for, and primarily that would be the U.S. Fed's decision, or the U.S. Key data. And looking at the levels to watch out for, somewhere on the downside, Nifty's got very strong support coming on the 22,150, 22,200 from a short-term perspective. Yeah, if that is taken out, then we could witness a 200 to 300 point correction in Nifty. Whereas on the upside, we are seeing some sort of consolidation. So 22,450, 500, that's a immediate zone of support, resistance for Nifty.
Right. Aamar, I have to ask you, when it comes to the broader markets, because even though during trade, or at least when we start up, we do see the broader markets really holding out, but there are quite a few factors that, through the day go on to impact it. Yesterday, we saw the small cap really take it on the chin, almost 2% cuts that we saw there. And then you had comments coming in from the SEBI chairperson also talking about, warning and caution about some bit of manipulation that they are seeing, but looking for evidence for that in the SME segment. So could that really see that rotation now take place within, the large caps, or moving away from these SME stocks?
So if we look at mid cap or small cap for that matter, so first talking about the mid cap. So mid cap 100, if I see, it's more or less we are seeing, it's been actually all these mid cap, Nifty mid cap or Nifty small cap, they've been trading sideways only, and we've seen some sort of correction at higher levels. As far as a small cap is concerned, the trend remains negative from a short-term perspective. Even from an intermediate-term perspective, the trend definitely has changed. So what that tells me, that a top has been made for both the mid-cap and the small cap, and some of the technical indicators from a short-term perspective, they are quite negative, but it's moved in oversold territory. So that tells me that there could be some temporary bounce back or respite, but we'll have to see whether the levels which these indices have recently made, would they be retested. Looking at the large caps, see, in such current market scenario where the markets are trading at record highs slightly here and there, and India VIX is also at comfortable levels. So investors would also be looking at maybe diversifying and also reducing the risk, because the risk reward ratio plays a very important role. So there, diversifying into large caps makes more sense in case there is some sort of correction in the markets. So, and also some of the small caps and the mid caps have really run away too far, too fast, where we are witnessing some sort of profit booking and some sort of realization by investors that there could be some, I would say, correction there. So that's the reason large caps are actually holding up. And there also, if you see, it's primarily some of the IT stocks and Reliance per se. HDFC is trying to find a base. So we'll have to watch out whether this base is held by HDFC.
Right. In fact, Aamar, do stay on with us. Let me address a couple of stocks that will be in focus today. One of them being Aditya Birla Capital. Now, this after the company has gone on to announce a merger of its wholly owned subsidiary Aditya Birla Finance with itself. Remember, this merger is in order to comply with RBI's mandate on scale-based regulations that they had put in place. Now, the move will go on to convert Aditya Birla Capital from that holding company to an operating NBFC, and that was what they asked from RBI. Remember, this makes Birla Group among the first large conglomerates to comply with RBI's scale-based regulations, especially for NBFCs. In fact, let me bring on Aamar on this and ask him, how this whole NBFC and financial space, we're seeing quite a bit of action happening there as well in terms of, if it's a regulatory overhaul, as well as how these companies are now trying their best to comply with different rules. We saw what the RBI has pulled up, not just Paytm, but after that we saw GM Financial as well as IIFL also being pulled up for different reasons. So how would you really be looking at the NBFC space and the financial space at this point, or any picks from them that you would suggest?
So if you look at the NBFC in the financial space, there we are witnessing some sort of correction, because the leaders like Bajaj Finance, we are seeing some sort of correction. Bajaj Finserv is more or less consolidating. Cholamandalam Investment, again, we are seeing some sort of consolidation happening there. If I look at some of the other names, ICICI Bank is one which did rally. Now it saw some sort of correction, but overall the trend that remains positive. And looking at some of the other names which you talked about, see, it's more of markets are and investors would be, I would say, slightly cautious in this space, because the way, as you rightly put out, the names wherein some action, regulatory action has been initiated. So that brings out some level of discomfort in the investors as to who could be next or what could happen again in the future. So these are certain questions which really no one has an answer to. So that's the reason that's a safe play, which is investors would definitely look at. Looking at Muthoot Finance, again, we are seeing that the stock did rally again, rallied almost to 1,500, contains on 1,400. So it tells me that there's more of, I would say, a range play in most of these NBFC names, and investors would be slightly cautious here.
Right. So be cautious is the note for NBFCs at least, but select names that you could be considering. Now, just before we get to market opening, maybe I can squeeze in a quick query coming in. Aamar, maybe you want to take this one, your view on Suzlon, and especially because we're talking about SMEs and, you know, that whole segment. How should one be looking at Suzlon for accumulation around that 34 level with a target of 50 or 55? This is a query coming in from Vignesh. Maybe quickly your take on that, Aamar.
Yeah, I would say Suzlon has corrected almost from 50 levels, currently around 39 or so. These are very important and crucial levels for Suzlon. So one can look at buying, but 35, 37 is going to be a very strong support zone. If that is taken up, then the stock could witness some sharp correction. Otherwise, there could be a pullback in the stock towards 45, 46 levels. So that's the range one should look at. The recent highs which the stock has made, that's going to act as a short-term top, definitely.
Right, perfect answer, Aamar. Right in time for when the market open, and hope that answers Vignesh's question. 35, 37 levels might be that support level that you need to look out for Suzlon. But there on your screens, what we were expecting, that little bit of pressure to continue for the Nifty below that 22,400 levels, closer to where it closed yesterday. So pretty much flat, we would say, open for the Nifty 50. Nifty Bank also seeing that same. I think it's just too initial to be talking about what could be the triggers, because we already saw from the handover, which was not that peculiar for that matter, and a lot riding on the data that is expected. So that is where we are seeing. But PSU banking pack, that one really holding out, and we'll be discussing that in detail as well on how the PSU banking pack has really been holding out. In fact, seen a good enough rally in year to date when you talk about it. Mid caps again there trading flat, we could say, but that's the one in the initial bit of trade that has so far really given that kind of support. But the small cap, after taking it on the chin yesterday, back again in the green, in the red, I beg your pardon there. So the small cap still seeing that bit of pressure which continues for these. If you look at sectoral indices, well, the metal pack, after being hammered in trade, we would say yesterday, it is slightly in the green now, that Nifty metals pack. So they're getting some bit of support there. Nifty auto as well seeing in the green this morning. So we'll have to see which are the stocks that are really pushing or contributing to these sectoral gains. One would say IT pack as well in the positive, and all of that definitely depends on where we are seeing the U.S. CPI inflation print, I beg your pardon, also comes. So we will have to wait and watch for which will be those gainers and losers, and I will pull that up on your screens just in a bit. After all of these sectoral ones that you are seeing in the red, the FMCG and consumer pack actually not really supporting the market at this point. But there on your screens, the ones that are really adding that support even in this, profit booking kind of environment. You have Adani Ports, BPCL, Apollo Hospitals there in your gainers list. In fact, Apollo Hospital was among the top gainers in trade yesterday as well, and it was the pharma pack pretty much that gained support. But you do have a Tech, Mahindra, Infosys from your IT pack as well, and that's what we saw in the sectoral front there. Those were the stocks really adding support to the Nifty IT pack. Cipla again from the pharma front there in your gainers list. TCS, Adani Enterprise as well as Grasim, there all of those your top gainers. Whereas on the flip side, let's see the top laggards in trade today. ITC, now this we will get to why and how, what's really making that. Britannia, HUL, so all your three big FMCG names there under pressure. Nestle India, Bajaj Finserv as well as JSW Steel. So pretty much that FMCG pack finding some bit of pressure, like buckling under pressure, we would say. Titan, Power Grid and Bajaj Finance as well in that list of laggards. So interesting, churn of stocks that are really making that. And in fact, we'll talk about ITC in further detail because that's the one that is going to be in focus among your top laggards as well. And this after there is a news that says that the British American Tobacco company, that is BAT, which is looking to kick off that partial stake sale, and this could happen as early as this week according to sources. Now remember, BAT holds somewhere close to a good amount of percentage, about 29% stake in ITC. So that is interesting to note because that has perhaps put that pressure onto the company. Remember, BAT is the maker of Lucky Strike cigarettes, which pretty much also goes on to sell the Indian partner, which is ITC. And BAT is looking at talks with Bank of America as well as Citigroup in order to facilitate this stake sale. It is looking for a potential divestment of close to $2 to $3 billion in ITC through these could happen mostly to block deals. At least this is what sources are indicating. And of course, it is going to be some bit of pressure that has come on to all of the FMCG pack because of that. Let me bring on board Aamar once again. Firstly, Aamar, tell us, how are you looking at the market open today? Is this pretty much on lines of what is expected, and what could be the strategy for the indices firstly? And then maybe we'll come back to you for your trade on ITC.
Yeah, I would say that looking at the indices definitely have support at the lower levels, which I talked about. And if you look at today, also made a low of 22,319. Currently, it's up by almost 20-30 points, but it's more or less consolidation. There is actually a clear lack of trend in the market from a short-term perspective. Overall, the trend remains positive. Some of that, which I talked about, the derivatives data, they really are, I would say, more or less mixed. So it's not very clear as to what is the trend of the market. So it's more of a I would say trade-off between the bulls and the bears. The levels, I would say, acting on the levels would make more sense. So as I said, on the downside, 22,250, 22,280, that's a zone of support. On the upside, 22,450, 450 to 480, that's a zone of resistance. So those are the levels that one can look at. However, the bias is still in favor of the bulls because the trend remains positive, but some of the derivatives data from a short-term perspective, they are more or less bearish as of now. That's the reason we are seeing this trendless move in the markets.
Right. Aamar,
and talking about the stock which you mentioned, ITC. See, ITC, actually the game, I wouldn't say is over, but yes, a top definitely has been made for ITC. We are seeing consolidation. So the technical indicators, they point towards, I would say, higher levels would be sold into. If the levels to watch out for, I would say 370, 380, that's a zone of crucial support for ITC, and any pullback will be sold into towards 420, 430 is a zone of resistance for ITC.
Right. I hope that also answers a couple of queries that came in for ITC. Yagnesh Balakrishnan wanted to know, especially after the stake sale, what should really be the play. And I think the levels Aamar mentioned really pretty much would speak on that. But Aamar, let me also quickly get your views on the Pharma pack. Now, what happened yesterday in trade, we saw pretty much all of the other sectoral indices out and about, but the Pharma one managed to hold on. So which among the Pharma stocks would be your picks? We are seeing the likes of, Cipla, Dr. Reddy's, even Apollo Hospitals among the gainers in trade today. So what really should be the play when it comes to pharma and your picks within that space?
I would say looking at the pharma space, what we are seeing is we are seeing some sort of exhaustion in the trend, current trend. That is very clear. So talk about the first name which you mentioned, Cipla. Cipla's overall long-term trend remains positive. Short-term, we are seeing some sort of loss of momentum in the stock. And I would say rather one should wait for any decent correction to enter in the stock. I wouldn't recommend at the current levels. Looking at the other stocks, Divi's Laboratory is more of a range play, nothing happening in that particular stock. If I look at Dr. Reddy's, again, Dr. Reddy's is also in for consolidation. Then if I look at Glenmark Pharma, this is one stock comparatively which is stronger as compared to rest of the stocks which I've talked about, because from a short-term perspective also, the stock continues to remain strong and positive on the charts. And the stock, if we go back in time and look at this particular stock, Glenmark Pharma, it had made a high of 1,262 in 2015. Currently, it's around 960. That means this is one stock which is still to retest its all-time highs, and the long-term trend remains positive. So any correction in the stock can be a opportunity to look at. And I would say rest of the other pharma stocks, I would say more or less are witnessing some sort of consolidation at the current levels.
Right. Well, before we let you go, Aamar, quickly your picks for today's trade that you would advise our viewers who are watching.
Yeah, I would say REC is one stock one can look at. REC Limited, this is one stock which is strong on the charts. Currently, we are seeing some sort of consolidation. Any pullback in the stock towards 478, 480 levels can be a buying opportunity, with a stop loss of 463 and a target of 526 on the upside. And the second stock to look at is Sundaram Fasteners. This is one stock which has corrected significantly from almost 1,300 levels to currently trade around 1,050, 55 odd levels. So the stock seems to have formed a very strong base, very strong support. This is more of a reverse trade. There is a possibility of a pullback towards 1130, 1140 zone. So that's where one can look at a target set on the stop loss that needs to be below the 1,000 level. So that's one stock which one can also look at.
Right, thank you. Interesting picks there, Sundaram Fast, as well as this from Aamar Singh. Thanks so much for joining us this morning and speaking with us and helping our viewers with those a couple of queries that did come in. Thanks so much for joining us. Well, let's also shift focus then to the fundamental side of the picture. But before we get into what's really going to drive the markets further ahead from here, are we going to be seeing a good correction in this run up to the elections? What could be those headwinds, tailwinds, all of that? But before that, let me also address the fact that there have been some inclusions that BSE has taken place in its various indices. Now, BSE has gone on to add Honasa Consumers in the FMCG index, whereas it's added Gandhar Oil Refinery. Remember, this is a newly listed company or so into the S&P BSE Energy Index, whereas the other newer listings like that of Tata Technologies, that one has been added into BSE IT Index, whereas Jio Financial Services, IREDA, India Shelter Finance Corporation, all of those added to the BSE Financial Services Index. On the BSE Healthcare Index, we are seeing the likes of Jupiter Lifeline as well as Blue Jet Healthcare that have been added into the Healthcare Index. So quite interesting and how those will really play out in terms of the volumes and inflows that these stocks sees will be important to watch out for. All of them pretty much, many of them in fact coming in from, just recently listed companies. Let's now then shift focus towards that fundamental picture that we were talking about, and joining me to do that is market expert Prakash Diwan. Good morning, Prakash. Thanks so much for being patient and waiting by, I would say. But, like we're seeing markets pretty much in this consolidation mode. Everyone has said that, we have seen quite a good rally so far, and there have been enough and more triggers for that. But now somehow we are getting into that consolidation phase once again. So would you say that we need to just wait it out because there is further rally ahead, especially in the run up to the elections? Or what should the strategy be for one who's looking at these higher levels now and wondering whether they should be entering the Indian equities?
Good morning. So, it's very clear as we get closer to the election timelines, a lot of the news flow will morph from being business led to, to things which have got more of a political undertone. And when that happens, you probably don't have markets necessarily mirroring the fundamental impact of any news flow, right? So it's going to be more sentiment driven. It's going to be more liquidity driven. It's a lot of positioning that will kind of undergo change and evaluation in terms of which sectors, which teams, which pockets of the market you want to participate as the political fervor starts getting stronger into election season. So the next couple of months is going to be fairly volatile, as I said, more largely driven by political news flow rather than business news flow. And within that, because you really don't expect much of orders coming through or much of developments from the government side on issuing fresh orders or any policy changes that could impact capital goods or defense or railways or things like that. So all of that will start slowing down in that sense or taking a little bit of a backseat. So what you have to look at doing this is a market that's giving you an opportunity to churn your portfolio, to get all the weaker players out, the weaker names out, book some profits, sit on cash, build into the newer themes that emerge. So, it's a very good opportunity while the market takes a pause. Yeah, you also kind of, utilize that to reset your portfolio. So to answer your question specifically, is it a good time to enter Indian equities? If you have a long-term view, of course it is, because nothing much has changed in terms of fundamentals of the economy. The economy continues to offer you a very robust stance. As I said, the sectors and the themes and the pockets could undergo a little bit of a shift, but the economy continues to be fairly robust as the numbers tell us. And a lot of money, which is destined for emerging markets, will start finding its way into India as political uncertainty goes through, the new government formation starts crystallizing. So I would believe you would need to look at buying into names, buying into pockets which will probably be driven a lot by liquidity as well. Yeah, whether it's financial services, BFSI, whether it's hydrocarbons, whether it's power. So those are the sectors where I think most of the fresh money from FIs would come, whereas the domestic money continues to kind of get allocated across the board. So it's a good setup. The correction is healthy. It's not very sharp. It's taking a lot of froth out. There were a lot of, these small cap, mid cap names, SMEs, for example, where there's so much of froth. And a lot of that was probably unexplained in terms of fundamental changes. So all of that will probably, bring to make the market much more healthier with the flap going out. So I would believe, wait for that to happen. Don't jump into anything just because it's kind of, coming out. Don't jump out of anything because it's coming down.
Right.
There could be reasons why some of the good things will also take a little bit of a reset on PE expansion, which was unbridled of sorts for the last 6-12 months. So it's a reality check that we are seeing, and it's always healthy for the market after that.
Right. In fact, Prakash, I was going to speak about that froth because yesterday we saw quite a bit of reaction really coming in for that small cap and, mid cap indices after what SEBI chairperson had to say. And also, all these safeguards that they're putting in place, asking mutual funds to, to rebalance portfolios as such, especially because of that froth that is building up in this SME segment. Also, when it comes to the IPOs that we're seeing in this segment, so many of them really hitting the streets. So how should one be really looking at them, or do you think there is that rotation that is necessary now, because we've seen that good rally and the party really for mid and small caps is over now?
So I don't think the party is over. It's just that the parties become a bit more selective, with more eligible people only allowed to go through the entrance. So it's as simple as that. Look at our SME segment. In the first place, SME as a segment was promoted by the regulators, by the exchanges, by SEBI to actually encourage capital formation for small businesses, which would otherwise find it difficult. Now, when you actually put money into an SME IPO, the whole idea is that the company would start growing at a different pace from there on. But what's happening is people expect that the moment the IPO is on, the company is getting discounted as if it's already grown. So it never happens. You put in money, you give it a couple of years, start seeing the changes happen. That's the time the reevaluation or the reset of the business would happen on a market, from a market perspective. But here it's happening on the day of the listing. Now that is because there's too much of money chasing very small floats. And that's something which is a skew, which I think rightfully the SEBI chairperson is addressing. And one good thing about what she mentioned is that they're looking at newer disclosure, more deeper disclosures, which means that it's time to educate investors that, hey, don't just get into a small stock just because, it's expected to list well. But, you buy a share only if you want to partner the business for the next few years and ride the growth. So that awareness needs to come in. I think if people are in a hurry to make money and nobody's been able to do that forever. So, once in a while you could do it as a flash in the pan kind of a performance from some certain pockets, but you can't extrapolate that to a much more broader market. So I think the froth was required. Mid caps, small caps, SMEs will continue to offer growth, but you need to be very selective. You need to make sure that you understand what you're buying and why you're buying that. Unless you understand that, you lose precious capital, and that's the troublesome part. But the regulators are also trying to make sure that there's not too much of overheating in some of the pockets because of the SIP flows, because of some preference for small cap investing that's kind of taking preponderance. I would believe it's a combination of a lot of things that are being done by the regulators, by the AMFI, by fund managers themselves. They've been warning about some of them getting into bubble territory. So investors should listen to that. It's very clear. They would not step out and talk about all this if everything was hunky-dory. So people need to make sure that they don't take these things very lightly. In fact, read through all that's happening and understand that it's your capital that we are talking about protecting and not somebody else's. So,
Right.
Be very watchful of where you're allocating to that money. But I think from a fundamental perspective, if you are, half wise enough to look for things which are not into bubble territories, you'll still make money. In fact, this correction could give you that opportunity. And these triggers like what is happening on ITC could be a wonderful opportunity to buy into a business which has got, this selling by one of the parents, is got nothing to do with the change in the business dimension. The business dynamics will remain the same. People will continue to consume their products. They'll continue to grow. It's just that liquidity overhang of a lot of supply for 2 to 3 billion coming in might have some sort of an overhang. But if that gets absorbed, and depending on who's buying into it, the stock could rebound very quickly. So these are opportunities that you look for, not a disappointment in fundamentals, but it's more to do with a tactical liquidity driven event, and hence the opportunity is much more safer to participate in.
Right. Prakash, in fact, I want to get your view on, this whole buzz that happened about 2 days ago, and which is why we did see the Tata group of stocks pretty much, down and about in trade yesterday. That because of that rumor, rather, saying that it is Tata Sons could be hitting the Lal Street with an IPO anytime soon. But, the other options are, will they go ahead and comply with, RBI's upper tier NBFC norms in order to and avoid an IPO, and which could be the one that would see the most value unlocking among the group companies if this IPO does go on. What would be your views, or what would be your take on this whole, rumor that is doing the rounds?
So first and foremost, because it's a rumor, you really can't, as I said, allocate precious money just on the basis of some possibility of something happening. It's more important that you buy into some of these companies because they offer fundamental value on their standalone characteristics itself. So let's say Tata Power, or let's say a Tata Motors, or let's say a Tata Chemicals. All of them have their own salience. You need to pay for that and not for an event that is probabilistic, right? And that too, it's really at this point so premature that even if the IPO were to be announced, it would take time. You would have to wait and see how things happen. So I think people jump at conclusions a bit too fast, too soon. And that's exactly why you saw between one day, how the market kind of, retraced all the gains that that particular Thursday made. So it's like a roller coaster that we ourselves want to kind of get into. But if you buy these companies from a fundamental perspective, and remember, the stakes that they have in Tata Sun will always yield some value, give or take some timelines, right? So it's not that the stakes have come down. It's just that the Tata Sons IPO is probably not seeing the light of the day for very soon, or possibly not seeing the light of the day, which means that the unlocking of Tata Sons value is probably not realized. And that's why you kind of, putting these stocks back from where they started. But the intrinsic value still continues because they own that stake. So I think you have to factor that in. And that's exactly why timelines matter a lot. in terms of what your horizon is. If you're here to make a quick buck on the basis of some rumor, you could probably lose that kind of money as well. But I'm from the camp which believes in seeking value and a bit more of a longer term horizon. And from that perspective, I think look at these businesses, they're so promising on their own, irrespective of what happens to the Tata Sun IPO. You'll still make money on Tata Power, Tata Chemicals, Tata Motors to some extent.
Right. In fact, I am going to speak about another Tata group of stock, and this being Tata Chemicals, which is facing some bit of earning headwinds, we would say. But, I want to talk about the chemicals sector as a whole. They've been seeing some bit, it has been sitting on the back burner, one would say, in many portfolios. But is there a chance now? And Prakash, your views on the chemicals sector as a whole?
Oh, absolutely. I think some of the early indications from some of the larger players have gone on record by saying FY25 could be far better. There's a little bit of restocking that's happening. Remember, Europe has been down for about 18 months now. So if things happen, revival happens, restocking comes up, it'll be fairly rapid in terms of what they could do. And Indian companies who have weathered the storm will probably find it much easier to compete from a price perspective as well as compared to China. So I think that space is very interesting. I'm glad you brought that up. Now, which company to go into and all, we could have a separate detailed discussion some other day. But yes, chemical as a space is exactly where Pharma was 6 months back. And you've seen how Pharma has outperformed the rest of the segments largely. That's the same thing which could happen, but you'll have to be very selective because it's a huge spread. Chemicals is not just a very narrow kind of a sector in India in the listed space. You have multiple options in that, different sizes, different chemistries, different geographies being catered to. So if you look at that, I think it's definitely worth digging into for some value buying at this point.
Right. My final question to you, we do have data that is expected later today, and the CPI print has been, pretty much a standard. We could say even this time expecting most of the polls suggesting that it will pretty much be in that 5.1 range of sorts, 5.1 to 5.8. But do you think there could be any sectors then that could really change the game? Not that, the CPI number makes that much of a difference, but we are getting into an election. We are getting into this whole monetary policy cycle that is going to play up. So do you think that, will it be for these rate sensitives that could really change much from here on?
So honestly, this is going to be the last phase of, last phase where RBI might not do anything in terms of a change. All the change that will happen is going to be after the new government comes in, the new budget gets announced, the new direction gets set. That's where, a lot of the inflation concern, a lot of spending and deficit issues will kind of get wrapped into the RBI policy. So if you really ask me, this is bound to be a non-event. I hope it's a non-event because then you are set for a restart of sorts, a fresh start of sorts after the budget is, the full-fledged budget is announced a couple of months down the line. So this probably won't make much of a difference, but BFSI as a space is something which is going through a bit of belt tightening, a bit of cleanup, and for the right reasons. That is something which will probably be the first beneficiary of any kind of a change in the rate cycle or a stance change by the RBI post these numbers.
Right. Well, thanks so much for that, Prakash, Diwan, for giving us your time this morning. A whole lot of different stocks and sectors that we really spoke about, and that could really go on to help our viewers that are watching this show this morning. Thanks so much for speaking with us. Let me quickly address also the primary markets that we're seeing. And today we're going to see two listings, one of RK Swamy as well as that of Bharat Highways. Now, these two are interesting calls that are IPOs that are going to see the listings. RK Swamy, remember, is a marketing service provider, and the issue price for that was fixed at somewhere around 288 per share. So we are going to see how that really turns out. Pretty much the grey market was showing that it would be a muted start, but come 10 a.m. we will know what kind of an debut these make on the Lal Street. Well, with that, it's a wrap, but thanks to all our viewers who've tuned in and who watch us regularly. One request to all our viewers, do keep continuing to send us your queries, and we'll try to answer them through the course of the show. But for everyone else, continue watching Money Control for all your news and updates.